Tesla remains ARK's top holding, making up more than 7% of all of ARK's ETFs by weight. And joining us now is ARK's co-lead of ARK Venture and AI analyst Will Summerlin. Will, it's good to see you again. Nice little shout out there, and I wonder whether or not his comments last night in aggregate made you more or less confident about your Tesla thesis.
Yeah, the way we approach investing in research broadly is through first principles. We really spend a lot of time trying to understand how a new technology is evolving and develop conviction based on that. And when we look at artificial intelligence, we spend a lot of time on cost declines, looking at how the cost to deliver a technology declines over time with scale. And in AI, it's actually declined at more than twice the rate of Moore's law when it comes to model training since 2012. So it's a 65% cost decline from 2012 to 2020. It's actually accelerated from 65% to 70% from 2020 to 2023. And so as we look at the technology and study the capabilities, we develop conviction. And hearing remarks from Elon directionally about where they're headed certainly increases that confidence.
Does it, I mean, we've talked with Kathy about this at length, not just regarding Tesla, but all things battery and robotics and AI. Do you think we are finally on the downward slide where this technology starts to feed deflation? And if so, what inning would you say we're in?
Yeah, well, if we look at just the capabilities of artificial intelligence in the context of Tesla, using full self-driving, a car is 5 times safer than a human operator already. And so we're already approaching a point where AI is outperforming humans. FSD is running about 1 million miles a day in autonomous mode. And so I think we're already seeing the technology fully capable of doing a task better than a human. We also see this in the context of knowledge work. So if we step back for a second, human knowledge workers are paid about $32 trillion a year to write code, review legal agreements, et cetera. And we're rapidly approaching a point where domain-specific models can outperform humans at a variety of tasks. We're seeing this in the context of software engineering as a leading indicator. So in software engineering, GitHub put out a study recently showing that software engineers using an AI assistant are more than twice as productive than software engineers without that AI assistant. We also invested through the private side in a company called Replit, and they very rapidly scaled to 22 million users who were using this capability to generate lots of useful code for websites, apps, et cetera. And they're seeing some developers with as much as 80% of their code generated by AI. And so I think we're rapidly approaching this point where AI is capable of automating most tasks that humans do in the context of knowledge work, and that will certainly be deflationary.
I wonder, traditionally, I think of ARK as high growth tech, cutting edge tech kind of companies, innovators, and that fits in with the AI theme. But if AI can truly disrupt all the industries and all the companies and get you productivity and efficiency and old school companies as well, whether you're taking a look there too, a bank, for instance.
Yeah, we're investing in companies that are really at the cutting edge of developing this technology. And when we think about the value accrual that will occur through AI, we think most of it will occur at the application layer, the companies who are developing these AI applications. And again, if we take knowledge work as one example, knowledge workers make $32 trillion a year, and we're already seeing knowledge workers double or triple their productivity using AI assistants. And so the companies that are developing the applications that enable that productivity uplift, we think will capture quite a lot of value. We think in our base case forecast, by 2030, the market for AI software will reach about $14 trillion annually. Just to put that in context, companies currently spend about $1 trillion in enterprise software. And so we think that's where the majority of value accrual will occur, and that's where we're investing.